Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 20th of February. I'm Daniel Lam, your host for the podcast. As the Hang Seng Index hit the 23,000 mark this week, we're hearing more quote-unquote mixed flows on the street. Some investors are taking their positions off the table because that level was the highs that the index reached back in the fourth quarter last year. So today, I want to put some numbers into perspective to see where we truly are. So first of all, where is the valuation of the Hang Seng Index after the recent sharp rally? Well, it has recovered from 8 times 12-month forward PE to just above 10 times. That is very close to the average level that we saw over the last 10 years. However, the index is still at 46% discount versus global equities. That is more than 1 standard deviation cheaper than the 10-year valuation average. In particular, I want to highlight the Hang Seng Technology Index, which we have an opportunistic buy upon. It is at 18 times PE, more than 1 standard deviation cheaper than its 5-year valuation average since the index came into existence. So the natural follow-up question is, what is the estimated impact of DeepSeek on the Chinese economy and Chinese stocks? Well, the Chinese economy is different from the US one, in that jobs in China are generally more physically intensive. So for example, 50% of jobs in China are in the agriculture, manufacturing, and construction industries, areas that are less prone to AI-related task automation versus the US. As such, there are estimates that AI would raise the China GDP by 9% versus 15% in the US. Nonetheless, the adoption of DeepSeek is a strong catalyst. For example, the number of DeepSeek users in China jumped much faster in the months since introduction versus previous AI apps. DeepSeek has gotten as much daily use in the first 2 months since introduction versus what the next most popular app achieved in 12 months. How does this translate into stock earnings? Well, consensus sees the fair value of Chinese equities going 15 to 20% higher. Coincidentally, this reflects the rise of the Hang Seng Index from just below 19,000 to the current 23,000 level. Therefore, technically and fundamentally, the Hang Seng Index seems to have fully reflected this first wave of DeepSeek rally. Most likely, we will get some consolidation in the near term, with the index pulling back to the support area around 21,000 to 21,600, and analysts potentially revising the earnings higher, before the index making another challenge at the 23,000 level and possibly go higher from there. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.